2021. You're up $200,000 in crypto. $200,000. You started with 10 grand, and now you're sitting on life-changing money. You're a genius. You've figured it out. Fast forward to today, your portfolio's worth $8,000. $8,000. But that's not even the worst part. The IRS just sent you a letter. You owe them $47,000 in taxes on money you don't have, on gains that disappeared. And it's 100% legal. You do owe it. If you traded crypto in 2021, keep watching, because we're about to talk about the tax bomb that's about to destroy thousands of people financially. And I'm going to show you exactly how to defuse it if it's sitting in your mailbox right now. Okay, let me paint you the full picture, because this isn't just some hypothetical thing. This is happening to real people right now. And statistically, if you're watching this video, there's a decent chance it might be happening to you and you don't even know it yet. So it's 2021. Bitcoin's going crazy. Ethereum's hitting new all-time highs every week. Your Twitter feed is full of people posting their gains. Everyone's making money. It feels easy. You're not dumb. You're not some degenerate gambler. You're doing your research. You're watching YouTube tutorials. You're in the Discord servers. You're reading the charts. You know what you're doing. Or you think you do. So you get in. $10,000, that's your starting point. And you start trading. Ethereum pumps, you flip into Solana. Boom, $20,000 profit. Solana's running, you rotate into some AI token everyone's talking about, another $30,000 gain. That AI token 10x's, you throw it all into an NFT project, $50,000 gain. NFTs are popping, you move to DeFi, another $40,000. One more flip, $60,000. You've now made $200,000 in total gains. Your portfolio is worth $210,000. You started with 10. You're sitting on 21x your initial investment. In your mind, you're retiring next year. You're buying that car. You're moving out of your parents' house. This is it. Except you never cashed out. Not to dollars, not to your bank account. Why would you? It's still going up. I'll sell when we hit 500,000, you tell yourself. Then 2022 happens. Terra collapses. Celsius freezes withdrawals. Voyager files for bankruptcy. FTX, which everyone thought was safe, explodes overnight. The entire market just crumbles. Your $210,000 portfolio? It's worth $8,000 now. You're devastated. You're broke. You lost almost everything. But at least you don't owe taxes, right? You lost money. You're not profitable. The IRS isn't coming after someone who's broke, right? Wrong. Here's where it gets absolutely brutal. And this is the thing that nobody tells you when they're shilling you the next 100x coin. Ready? Every single trade you made was a taxable event. Not when you cash out to dollars, not when you take profits. Every trade, crypto to crypto, NFT to token, doesn't matter. The IRS says you sold one asset, you bought another. That first sale, that created a capital gain, and capital gains are taxable. You thought you were just moving money around. In your head, you didn't make money until you cashed out to real dollars. The IRS, they see it differently. Let me show you the actual math, and I want you to really pay attention here because this is where people's lives get ruined. Trade 1. You bought $10,000 of Ethereum. Ethereum goes up. You sell it for $30,000 worth of Solana. In your mind, I just moved from ETH to Solana. In the IRS's mind, you sold ETH for a $20,000 gain. You owe taxes on that. Taxable gain, $20,000. Trade 2. Solana pumps. You sell your $30,000 of Solana for $60,000 worth of AI tokens. Your mind, just flipping coins. IRS mind, you sold Solana for a $30,000 gain. Taxable gain, $30,000. Trade 3. AI token to NFT. $60K to $110K. Taxable gain, $50,000. Trade 4. NFT to DeFi. $110K to $150K. Taxable gain, $40,000. Trade 5, DeFi to shitcoin, 150K to 210K. Taxable gain, $60,000. Total taxable gains, $200,000. Your tax rate? Let's be conservative. Federal is 24%, state is 6%. That's 30% combined. 30% of $200,000 is $60,000 in taxes. That's what you owe. Now, you're probably thinking, wait, my portfolio crashed. I had $210,000 and now I have $8,000. I lost $202,000. Can't I write that off? Yes and no. You can write off losses, but, and this is a huge but, you can only write them off against other capital gains. And there's a cap. You can only deduct $3,000 per year against your regular income. So, let's do the math. You owe taxes on $200,000 of gains from 2021. You have $202,000 in losses from 2022 and 2023. Technically, you can offset all the gains with all the losses, eventually, over like 67 years. But there's a problem. Those gains and losses are from different tax years. 2021 is closed. You owe for 2021. The losses from 2022, those help you in 2022. They don't magically fix 2021. And here's the knife twist. If you never actually sold your crash positions, if you're still holding that $8,000 of dead shitcoins, you haven't even realized the loss yet, which means you can't even claim it. So in April 2025, when the IRS finishes matching your transactions, you owe them $60,000. Your entire net worth is $8,000. Game over. Real quick, and I need you to actually think about this for a second. Did you trade crypto in 2020, 2021, or 2022? Did you go from coin to coin, token to token, chasing gains without ever cashing out to dollars? Do you have no clue how many trades you actually made? If you said yes to any of those, you might be in trouble. And the thing is, you probably have no idea, because the exchanges didn't tell you. The YouTube videos didn't warn you. Nobody said, hey, by the way, every time you swap coins, that's a taxable event. Now look, this gets worse before it gets better, but stick with me because I'm going to give you actual solutions at the end, not just doom and gloom. Real actionable things you can do if this is happening to you. But first, you need to understand why this is blowing up right now. Okay, so why is this happening now? Why didn't this happen in 2022 or 2023? Why are people just now getting these letters? 3 reasons, and they're all terrifying. Reason 1, the exchanges snitched. Starting in 2023, all the major exchanges, Coinbase, Kraken, Gemini, Binance.us, they're now required by law to send Form 1099 to the IRS for every user, every transaction. Before this, the IRS had no idea what you were doing. Crypto was the Wild West. It was anonymous. They couldn't track it. Now they have everything. Every trade, every gain, every transaction. It's all reported directly to them. And their computers, their algorithms, are matching your 1099s forms with your tax returns. If you reported $20,000 in income, but Coinbase reported that you had $200,000 in gains, flagged automatically. Reason 2, the 3-year window. The IRS has 3 years from the date you file your tax return to audit you and come after you for more money. If you filed your 2021 taxes in April 2022, that 3-year window closes in April 2025. We're in February 2026 right now, which means they're in the final push. They're sending out letters like crazy because this is their last chance to collect on the 2021 bull run. In 2021, that was the biggest bull run in crypto history. They know there's money to be made. They're not letting that slide. Reason 3, the algorithm got smarter. For years, the IRS didn't have the technology to process crypto transactions efficiently. They were overwhelmed. They didn't have the people, they didn't have the software. But they've been building. They hired blockchain forensic specialists. They bought analysis software from companies like Chainalysis and Elliptic. They trained agents specifically on crypto. And now their AI matching system is catching discrepancies automatically. You don't even get a person looking at your case until after the computer flags you. It's efficient, it's fast, and it's ruthless. And here's the thing that nobody's talking about. They're not just going after the big fish. You made $10,000 in unreported gains? Flagged. You made $5,000? Flagged. You made $2,000? Believe it or not, flagged. I've personally seen letters go out to people who owe $1,200 in taxes. The IRS doesn't care if you're small. They want every single penny. And honestly, I don't blame them. It's their job. Now, before I show you the 5 actual solutions you can use if you get one of these letters, let me tell you about something that most people don't know exists. There's a completely legal loophole. It's called an offer in compromise that the IRS doesn't really publicize, and most CPAs don't even know how to use it properly. If you qualify, you can settle your tax debt for literally pennies on the dollar. I've seen people owe $80,000 and settle for $12,000. I've seen $200,000 debts settled for $30,000. I'll tell you exactly what it is and how it works in just a minute. But first, we need to talk about the 3 worst things you can do if you get one of these letters. Because when people panic, they make horrible decisions that make everything worse. When people get that letter from the IRS, they freak out. I get it. I would too. It's terrifying. But when you panic, you make mistakes. And some mistakes will literally cost you tens of thousands of dollars. Here are the 3 biggest ones. Mistake number 1, ignoring it. I cannot stress this enough. Do not ignore the IRS. Some people think, maybe if I don't open the letter, it'll go away. No, it will not go away. The IRS is the one creditor you absolutely cannot ghost. They will put a lien on your bank account. They will garnish your wages. They will intercept your tax refunds for the next decade. And the penalties for ignoring them? 5% of what you owe per month, up to 25%, plus interest, plus failure to pay penalties. If you owe $50,000 and you ignore it for a year, you now owe $70,000. Congratulations, you just made it worse. Mistake number 2, trying to handle it yourself. Look, I respect the hustle. I get it. You want to save money on a lawyer. But here's the thing. The IRS is not your friend. When you call them, the person on the phone is reading from a script. Their job is to collect money. They're not there to help you find loopholes. They're not your advocate. You need professional representation. Period. Do not, under any circumstances, try to negotiate with the IRS by yourself. You will lose. They do this every single day. You do it once in your life. Get a tax attorney or an enrolled agent who specializes in IRS representation. Yes, it costs money up front, but they will save you multiples of that on the back end. Mistake number 3, putting it on a credit card. This one makes me cringe every time I see it. Someone gets a $50,000 tax bill. They panic. They think, I'll just put it on my credit card and figure it out later. No, 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 no. Credit card interest is 18% to 24% per year. IRS interest is around 8%. If you have to go into debt to pay this, the IRS payment plan is much cheaper than a credit card. Plus, and this is important, if you put $50,000 on a credit card and later can't pay it, you can declare bankruptcy and discharge that debt. But IRS tax debt, you cannot discharge it in bankruptcy. It follows you forever. Never put tax bills on credit cards. Never. All right, enough of the scary stuff. Let's talk about what you actually do if you get one of these letters. Here are your 5 real options. Option 1, installment agreement. This is the most common and straightforward solution. You can't pay $50,000 right now? Fine. The IRS will let you pay $500 a month for 100 months. You can literally apply online. It takes about 20 minutes. There's a small setup fee, but the interest rate is way, way lower than any other debt you have. Pros: stops collections immediately. monthly payments you can actually afford. Cons, you're still paying the full amount plus interest, and it takes years. But honestly, for most people, this is the way to go. Option 2. Offer in compromise, the secret loophole. Remember I mentioned this earlier? This is the big one. An offer in compromise is basically you settling your tax debt for way less than you owe. The IRS looks at your situation, your income, your assets, your expenses, and if they determine that you'll never be able to pay the full amount, they'll accept a settlement. I've seen someone owe $80,000 and settle for $12,000. I've seen someone owe $200,000 and settle for $30,000. It's real, it's legal, it works. The problem? You need a tax attorney to do this right. The paperwork is complicated. If you mess it up, the IRS will reject it and you're back to square one. But if you qualify and you do it right, it's a total game changer. Option 3, currently not collectible status. If you're truly broke, like no job, no assets, barely any income, you can apply for what's called currently not collectible status. What happens? The IRS puts your debt on hold. They stop collections. You don't have to pay anything. And after 10 years, the debt expires. It just goes away. The catch, you have to prove you're actually broke. If you own a house, have a retirement account, or make decent money, you won't qualify. But if you genuinely have nothing, this can save your life. Option 4, innocent spouse relief. This is rare, but if you're married and your spouse did all the crypto trading without your knowledge, you can potentially get off the hook entirely. You have to prove you had no idea it was happening. But if you can, your spouse owes, you don't. Option 5, amend your return with proper cost basis. Here's one people forget. Maybe the IRS letter is actually wrong. If you didn't report your crypto trades at all, the IRS assumes your cost basis was zero, meaning they think every dollar you received was pure profit. But that's not true. You paid for those coins. You had a cost basis. You can amend your tax return with proper documentation showing what you actually paid for everything. This can cut your tax bill by 30 to 50% or more. You'll need software like CoinTracker, Coinly, or TokenTax to reconstruct your trade history, but it's absolutely worth it. Look, here's the bottom line. If you traded crypto in 2021 and didn't report it properly, you're in one of two categories. Category 1, the IRS hasn't caught you yet. If this is you, file an amended return now. Don't wait for them to come to you. If you self-report and pay what you owe voluntarily, the penalties are much lower. You're showing good faith. They'll work with you. Category 2, you already got the letter. If this is you, first, breathe. Don't panic. Second, do not ignore it, and do not try to handle it alone. Hire a tax professional. Yes, it'll cost you $2,000 to $5,000 up front, but they'll save you $20,000 to $50,000 on the back end, maybe more. And here's the most important thing I can tell you. This is fixable. I know it feels like your life is over when you get that letter, but people deal with IRS debt every single day, and they come out the other side. You're not the first person this has happened to. You won't be the last. The IRS wants their money, but they're not trying to destroy your life. If you work with them, they'll work with you. This is fixable. Going forward, here's the new rule. If you're trading crypto, track everything. Every trade, every transfer, every transaction. Use software. Coinly, CoinTracker, TokenTax. Pick one, connect your exchanges, and let it handle the tracking for you. And if you're making gains, pay quarterly estimated taxes. Don't wait until April. The penalties for underpayment are brutal. If this video helped you, or if it scared you into taking action, which honestly, good, hit that subscribe button. I break down finance, crypto, and taxes with real examples. No hype, no BS, just facts. Drop a comment and tell me, have you dealt with crypto taxes? Any horror stories or success stories if you navigated this without getting wrecked?
And if you know someone who traded crypto in 2021 and never filed properly, send them this video. You might literally be saving them from financial ruin. All right, see you in the next one.